Hey, Ralph, can you hear me?
Yes, sir.
Can you see me?
Yep.
All right, it's working. Good. Wait for about another minute, and then we'll go over some of the stuff on the project. And then if we have some time, I might actually kind of do some demonstrations with some of the Chapter 12 problems as well today.
Okay.
I'm not sure how many people will join us because, with this COVID thing, there could be people that have to watch their kids, and I don't know what's going on really. So, I mean, whoever can join, it's optional, but I'm trying to help.
Oh, it's very, very challenging, to say the least.
It looks like Everett Hughes is going to join us too. I see two other people on here.
I'm here. I guess you can hear me.
Yeah, I can see you. I can hear you.
Same.
All right, guys, it's 10 o'clock. It looks like we got about 4 people in here, so I'm going to go ahead and start. I went ahead and shared my screen. Can you guys all see that? I got the
Yes.
Blackboard screen up.
Yeah.
All right, so just a couple things. On this project, let me check something. Hold on just a second. I got a different, I want a different screen. Hold on, I'm on the wrong screen. Hold on. All right, I think I got it now.
Can anybody see me?
Yeah, I can. I see you, Kelly.
Oh, okay.
All right, so first of all, I'm assuming everybody got registered with Connect because it's free right now. That's the LMS system that comes with the textbook, but you guys don't have to pay for it. But hopefully at this point, you guys did take your exam. Just individually email me if there's any issues with connecting. Some people have had some issues, and I can work around those with you as well. Now on the project, hold on, I'm trying to get this up. My screen's kind of weird on me right now, but let me try this one more time. You guys should be in the Blackboard. If you can get to Blackboard. Let me try this one more time. Because right now you'll see the Connect registration instruction, but that's not the screen I'm trying to show you. Hold on. This is our first virtual meeting, so I figured there might be a couple little weird things going on with my computer as well, but I'll get it up. Don't panic. All right, hold on. I think I know it's the problems. Hold on just a second. Okay, you guys got that right. So here's what you want to do. I got it fixed now. So once you get into Blackboard, I'm just going to walk you through a couple of the specifics, and I'm going to actually demonstrate part of the project. So if you go into Learning Modules, I'm going to click that right now. If I page down, you're going to find a link. It's right after the Chapter 6 module. It's called Project Module. So if I open that up, there's 3 different files. You've got one, which is the project instructions. You got the next one, which is the actual project. That's going to have all the transactions that you're going to have to enter into the journal. And then you've got what I call the project journal. This is your answer sheet. This is where you're going to actually enter your answers. You don't have to handwrite any of this stuff. You're going to enter it into this spreadsheet that I've created for you, and then simply save it. And then you'll submit it down here where it says Submit Project in Blackboard once you're done with it. Now, I went ahead and I've already opened up these files. So I'm going to show you, first one, the project instructions. Let me bring that up. All right, hopefully you can see that. Can you guys see the project instructions?
Yes.
All right, so I'm not going to read the whole thing, but just read through that. That's just all the details of what you got to do. And I'm actually going to show you this here in a minute. But if you just read through this whole thing, it's going to tell you how you need to go into the spreadsheet and where to go. And again, I'm going to show you that visually right now. But just kind of make a note that this thing is due May 10th. You know, today's April 20th. I don't think it'll take you more than probably an hour to get it done. So don't delay, but it is a 50-point project. Typically, students have good results on this in the class. But go ahead and read through that. And then now I'm going to go to the actual project. I want to show you what that looks like. All right, so here it is. So notice it's got these requirements at the top where it says prepare journal entries in the general journal and post to the ledger, prepare adjusting entries and post to the ledger, prepare your financial statements, which is the income statement, equity, balance sheet, and then the 4th one, which is the closing entries. Now, guys, everything on here, you're essentially going to be doing in that answer sheet that I'm going to show in a minute. So you can read this, and I've given you all the different accounts up here. Guys, here's the transactions right here. I'm going to enlarge that in case you can't see it. So you've got the month of October, and all these should be very familiar to you at this point. And I'm going to walk you through the first one here where it says the owner invested $40,000 cash in the business. I'm going to show you where you would go in your answer sheet to enter that, how to enter it. And then I also want to show how I've set up the spreadsheet so that really the ledger and the financial statements all update automatically once you enter these. So basically everything posts automatically. But so here's your transactions. You got this section. And then you've got a section on it says end of month adjustments. You're going to have 4 individual adjusting entries. I'm going to show you where you do those. And again, the financial statements will update automatically. And then finally, you just kind of read through the rest of, you know, you've got the closing entries to kind of wrap it up. So at that point, let me show you the actual spreadsheet. All right. So it's going to look something like this. When you pull it in, when you actually open up that Excel spreadsheet,
no matter what the governor says, to just residents on the beaches reopen. And so there is now to how the social distancing would be enforced without putting law enforcement at risk right now, John.
I don't know, this thing took over. Something weird happened with my screen. Hold on a second, guys. Okay, so can you guys see this right now?
I can't.
Can anybody else not see my screen? Can't see the project? It should look like a journal.
It slipped away.
It
Just see
did?
you. No,
Hold
I
on.
just see you and everybody else's screen.
Yeah, me too.
Hold on a second. Let me get this back. Is that better?
Yeah, there we go.
Yeah.
I can see it now.
Okay, sorry about that. Again, this is our first meeting. I figure I have a few little hiccups along the way. Just bear with me. All right, so here's what it looks like. So this is called the general journal part of the spreadsheet, and you'll notice you see all these green cells I have highlighted in green. That's where you're going to be entering your transactions, and you'll note that I actually put all of the dates out here to the left to correspond with the transactions that I've lined them up so you know where to enter them. So that first one where it said the owner invested $40,000 cash in the business, right? So what you would do is you go to this first cell, and you'll notice what happens is when I click the cell, you'll see a drop-down arrow. So if I click that drop-down arrow, you simply search for the account that you want. So we're going to look for cash. So if I click enter, it's going to automatically, once you hit the drop-down arrow and hit cash, it's going to put cash into that cell for you. You don't have to manually type anything. And so if I go to the next cell, of course, I'm looking for capital. So I click down the drop-down arrow, and there it is. And I highlight it, and it's going to input that in there for you. So that's all you have to do to select your accounts. You just click the drop-down arrow and then select the account name. Now, the amount was what, 40,000? So you'll have to manually enter that. And then that's it. That's all you got to do. And once you've done that, at the bottom, this says General Journal. I want to show you that the General Ledger, the way I've got this set up, automatically posts it. So there's cash. See cash. There's cash. Notice that 40,000 has been posted automatically into the ledger account. So you don't have to even touch this part of the spreadsheet. Just have to review it. And so if I go down, if I wanted to find capital, you'll see that capital, the balance is already there. There's that 40,000 that's been posted. So the posting issue is not going to be your problem as long as you get the stuff entered in the general journal. Everything's going to post automatically to the ledger. Now, let me go to the financial statements. You'll note that everything's linked here. So if I go to, for example, the balance sheet, do you see where it says cash balance of 40,000? Because that's been posted automatically again from your ledger. So that should actually make the project a little bit easier for you. You just have to make sure that you enter the right journal entries, because both your ledger and your financial statements will update as you do those. Now, this thing over here where it says chart of accounts, you don't even have to mess with that. That's just where I created all the different account names that you're going to be using for this project. So if I go back to the general journal, here's your first entry. I'm giving you this one. So debit cash, credit capital, 40,000. And then you'll enter all those in this part of the journal. Now, once you get to the adjusting entries, you'll notice that this is still in your journal. I've got adjustment for equipment, adjustment for prepaid insurance, adjustment for supplies, and adjustment for unpaid wages. So these 4 entries, this is where you want to put those. So when you get to the equipment, of course, that's going to be your depreciation. You have to do your straight line depreciation calculation. You'll do your debit and credit, and then you'll get those in. And then once you've entered those, again, your ledger will update automatically. So then your last part of this project is going to be doing the closing entries. Now, that's, of course, Chapter 6. And on your closing entries, you'll have 4 different entries. I've already put the names of the accounts in the order that I want you to put them already for you. So I'll have you close out the revenue account first. You'll close it to income summary. And then you'll close out all your expense accounts to income summary. That's the second one. And then you close out income summary to capital. And then you'll close out drawing the capital. So you have to enter the appropriate amounts right here in this part of the project to do your closing entries. Now, once you've done that, to double check to make sure you did it correctly, when you go to your general ledger, once you enter your closing entries, you just want to make sure that all of your temporary accounts, all your expense accounts and your revenue account and your drawing account, you want to make sure that they have a zero balance. So what that should tell you then is, as you are doing your closing entries, you've got to go to your general ledger, and it's simply, for example, you'd go to repair fees revenue account. Whatever balance is over here, that's the balance you want to put into that closing entry. You would go to wages expense at that point, whatever balance is in wages expense, and put that in that closing entry. And then once you've done that, come back and make sure that these balances are in fact zero. And so then once you do that, you essentially should be done. You might want to also then go back and take a quick look at your financial statements just to kind of eyeball them and make sure that they make sense to you. Okay, so that's basically it. Now, what I'm going to do is I have another video that I've already recorded that's going to walk you through these same steps. I'll go ahead and post that video in Blackboard today. So even after today's meeting on this, you can go back and again watch this again step by step exactly what you have to do with this project. So again, I can't say enough. I mean, today is April 20th and it's due May 10th, which is essentially, I think that's right before the week of final exams. So what I would suggest you guys do if you got some time is to try to get this thing done this week, because we're going to spend 2 weeks with chapter 12. When I change the schedule, we're going to spend 2 weeks with chapter 12. So get this thing done this week, and then that way, as we're working on chapter 12, you don't have to worry about the project anymore. You just want to make sure you get this thing done, okay? And along the way, as you're working on it, just email me if you have a problem or a question about it, and then of course I'll get back to you. Does that make sense to everybody?
Yeah.
Yeah.
Does anybody have any questions? All right, so let me pull something up here. Hold on a second. All right, so if there's no questions, what I'm going to do is I went ahead and pulled up, I'm going to share the PowerPoint. This is chapter 12. And I think I told you way back before the spring break, because we had, up to about the last time I think we were meeting, we were finishing up chapter 5. Chapter 12 covers all of the rest of the adjusting entries that you're going to have to do. And so there's going to be 4 types. You've already done the prepaids. The prepaid expenses is like supplies, the depreciation expense, prepaid advertising, stuff like that. You've done those in chapter 5. That part of the review. They're going to do some of those in chapter 12. What you have not done yet is what they call the unearned revenues, or the accrued revenues, or the accrued expenses. And so just to kind of remind you, let me go back. Let me find it. Okay. Everything about adjusting entries and accrual accounting is all about time periods. They call it the periodicity assumption. And so I'm going to go ahead and pull up the textbook today and walk you through a couple of the review problems, then mention some things you don't have to worry about with chapter 12. And I also think this will help you with the project as well. But just remember, it's all about timing. We've got revenue recognition principle. When you recognize revenue, of course, when it's earned. And then, of course, you've got the expenses. Is that we always say, let the expenses follow the revenues. You want to match the expenses with the revenues. It's all about this matching principle. All right. So having said that, let me see if I can pull this up. Give me a second. I may have to go back, and I think it took me. Let me go back. I'm going to open the textbook just a second and get into a problem. Give me just a second. All right, can you guys see that where it says exercise 12.1?
Yes.
Okay, all right. First thing in chapter 12, as you're doing your study, and by the way, I went ahead, all of the learning modules that you got to do for the rest of the semester, which is essentially chapter 12 and chapter 13, guys, all of my videos and textbook illustrations and handout illustrations I'm giving you, I've already saved it in MP4 video format, so it should be easier for you guys to open them up. I think before they were saved as like a PowerPoint mix, but now they're all, I've converted them all into MP4s, which I believe should be able to be viewed on just about any computer. So make sure when you're doing chapter 12 that you go ahead and play those videos. I'm going to walk you through essentially what I've recorded already for you. But one thing I want to show you is when you get to chapter 12, they talk about this thing called determining the adjustments for inventory. Skip that part. We're not doing that part. The way they show you is real kind of weird. It's nothing that you would actually ever do in industry. So that's the one adjustment that I do not test you on with chapter 12. Do not worry about how they do adjustments for merchandise inventory. Don't worry about that one. So that's actually in 12.1 and 12.2. Don't worry about that. But I'm going to go down to 12.3 and walk you through a couple of the adjustments just as review. And as I do some of this, I'm going to use my stylus and we'll see if it doesn't mess things up, but I'm going to try to do some writing on this screen. And again, let me know if something looks weird. But this one is 12.3, where it says computing adjustments for uncollectible accounts, depreciation, and of course, payroll items. So on this first one, this is a brand new one, where it says, part A, it says during the year 2019, Samsung Company had net credit sales of $1,950,000. Past experience shows that 1.5% of the firm's net credit sales result in uncollectible accounts. So this type of an adjustment comes about because of accounts receivable. What happens is when you have a credit sale, which is essentially a sale on account, what happens is you don't have that cash yet. So I'm going to attempt to draw on this and see how this goes. But so this net credit sale of $1,950,000 right there. What's going to happen is that's accounts receivable, and just like any business, sometimes you have customers who don't pay. So what they tell you, I'm going to write this out. So what you do is you would take that $1,950,000 and you're going to estimate how many of those customers will not pay you. And this problem says that's 1.5%. So you'd multiply that by 0.015. Do that. That's going to give you $29,250. And just to kind of make a note, that is an estimate. All right. So what the accounting rules say you have to do is you have to do what they call an accrual of an adjustment, where you actually have to estimate what customers aren't going to pay. You're going to have to record that as an expense in this time period. It's a matching because you have revenue that you're recognizing right here, but you want to go ahead and match up this estimated expense with this revenue in that same time period. So the only way you do that is you simply take the credit sales times whatever estimate you think is going to be bad. We call these bad debts, and you're going to have to record, an adjusting entry. And so what that would look like, let me pull this up. Now this is from your textbook. This is the actual, you guys actually have this in your textbook. This is in Blackboard. This is your ebook solution. I want you to look, let me enlarge this. I want you to look at that first entry. I'm going to highlight this. You see where it says uncollectible accounts expense debit, and then you credit this account called allowance for doubtful accounts. There's that $29,250. So these are brand new accounts. We have not done these yet. So sometimes I call the uncollectible accounts expense, I'll call it like bad debts expense. But they use an uncollectible accounts expense, so I'll go ahead and use their account. This account, which they call the allowance for doubtful accounts, that's just like the accumulated depreciation account you did with the, that's called a contra asset. And in this particular situation, it's a contra asset that gets paired up with accounts receivable. So for example, what would happen is on your balance sheet, let me write this off to the side here. On your balance sheet, what you would have is you would have all of your AR, all of your accounts receivable, and then you would subtract out this allowance for bad debts or allowance for uncollectible accounts, for doubtful accounts, to get what they call your net accounts receivable. And sometimes they refer to that as your NRV, your net realizable value, but essentially it's what you expect to collect, okay? So just to kind of make a note, this account right there, which is called your allowance for doubtful accounts, again, that is a contra asset, just like the next one where you have accumulated depreciation. So therefore it's still on the balance sheet, but it's got a credit balance, okay? So this is a brand new type of entry. We haven't done this yet. So as you do your practice, you'll be doing a little bit of that. Okay, so let me clear this. So let me go back. All right, now it's working. All right, so that would have been 12.8. So that's a new one. Okay, now on part B, this is going to be a review problem, and this is with equipment. You'll note that it say equipment purchased by Park Consulting was for $38,230. That happened on January 2nd. It says has an estimated life of 10 years and a salvage value of $2,700. They want the adjustment for the year. So this is going to be a year adjustment. So I'm going to write this up here. So remember, you got your straight line method, which is your cost, which is $38,220. You're going to subtract out your salvage value, which is $2,700. That's your numerator. And then you got to divide by the life of the asset. And in a lot of cases, the life of the asset, I think we divided by months when we were in class. And if they were asking for 1 month adjustment, we would divide by 120 months because it's 10 years. But in this case, because they want this for the year, it's probably easier just to divide by 10 because it's 10 years. And if you do that, you get, I think it's right at 3552. That would be how you get your depreciation expense for the whole year. So again, that's a review one, but I just wanted to kind of remind you, most of the ones in chapter 5, they gave you salvage value of 0. But in this chapter, I believe all of the depreciation problems they give you, they're going to give you some sort of salvage value. So let me go back then. I'm going to go back to the actual answer sheet. And you'll note, here's your depreciation. Notice there is your 3552 right there is your debit and credit. Here's your depreciation expense debit. And of course, guys, there's your accumulated depreciation. So this one right here, let's circle it. That's a review problem from chapter 5. Okay. All right. So let me go back to the textbook. All right, here we are. So now this thing about part C. So this is important to note. So on part C and D and E, this is all about payroll. And I know we didn't get a chance. I think we were right at that point in the semester. We were getting ready to do some payroll accrual examples. What I'm going to tell you for chapter 12 is you don't have to worry about the tax accrual because they want to show you how to do a Social Security tax, a Medicare tax. We didn't, there's another chapter that we didn't cover that just does payroll. Since we didn't do that, I don't want to confuse anybody. I'm just going to cover this type of an adjustment with your simple payroll accrual. And in this case, this isn't what they call an accrued expense, where the year ended on December 31st. And it said where they owed wages of $11,400. That's going to be your accrual. So two things I want to show you here. So on this one, let me go back. If you look at, this is letter C, you'll notice, I'm going to draw an arrow, they debited wages expense and they credited wages payable. There's your debit and credit entry. And of course, there is the amounts. Debit 11,004, credit 11,004. That's pretty easy. But what I want to show you today, since I got you guys on here, I'm going to go to the whiteboard here, is just right now, I'm going to talk about how would you go about doing a payroll accrual. And I think you have to do one of these on your project. And so let me draw a timeline here. So essentially, let's say we have $5,000 as our weekly payroll. Here's our setup, and it's going to be paid every Friday. All right. So let me draw our timeline here. So we got Monday, Tuesday, Wednesday, Thursday, Friday. Friday's payday. So what happens then? Let's just say that December 31st is on a Wednesday. So here's how you have to do this. So at that point in time, you're going to assume that you've got 3 days, Monday, Tuesday, and Wednesday, of where you actually owe employees, where they've actually come in and they work and you actually owe them money. Because the financial cutoff date is on Wednesday, you have to accrue Monday, Tuesday, and Wednesday's payroll into that year's financial statement. So if this is 2019 right there, and I say now we're into 2020, that's our cutoff point. We have to figure out how much of that weekly payroll do we need to report in 2019 versus 2020. So what you would do is you would take that 5,000, divide by 5. You'll say it's a 5-day work week, and that would tell you that we owe $1,000 per day for our payroll. So if we've got our time period here being 3 days, right, Monday, Tuesday, Wednesday, we would take that 1,000 and then multiply that by 3, and our payroll accrual would be $3,000. So you'd still have something like this. You'd still have wages, expense, debit for 3, and then you'd credit something like a wages payable for 3,000, and then that would be how you would do your adjusting entry. So you'll have to do one of these very similar to this on your project. I think the ones in this actual chapter, they actually just give you the payroll amount, the accrual amount, but you should also understand the concept of the, why we're doing this accrual. And if you can follow this on this whiteboard, I'll keep it pretty simple. Anything that I give you will be like a weekly payroll, like 5,000, where payday's on Friday, and then you'll just have to divide by 5 to get the per day, and then figure out in terms of our time period, is it 1 day, 2 days, or 3 days? And this example I just gave you, you would have 3 days that you would owe that you would have to put in your financial statements. Does that make sense?
Yeah.
Yeah.
Yeah, so I keep it, and guys, payroll can actually get pretty tricky because we all know that Friday isn't always payday for everybody, and sometimes you work weekends and odd hours and stuff like that. But just to show you the concept of an accrual, if you come across something like this on the project, use this as your example to figure out that one adjusting entry on your project. All right. Now going back, let me go back. So back to your textbook. Again, I'm not going to make you responsible for the accruals of just the taxes. I'll just make you responsible for just the basic payroll accrual. All right, now that's one thing. Now, another thing, let me page down here. Hold on, get this. All right. Okay, the other big thing, and this is probably what I'm going to spend most of the time on in this chapter with you, because I think it's the thing that I tend to want to make sure you truly understand. It's the concept of interest and the interest accrual. So probably because right now we're at 10:33, and guys, this is again our first online meeting, and using this thing called Zoom. I'm not sure, they told me that they're waiving the 40-minute time limit, where after 40 minutes they would cut us off. If we happen to get cut off after 40 minutes, you might want to wait a couple minutes and then just log back in, and I'll do it the same, and we should be able to connect again. I'm just giving you a heads up, in 7 minutes they may cut us off. But let me show you this real quick. This is 12.4, and I want to talk about this thing called interest. And you'll notice, again, this is part A. I'm just going to focus on part A because I think that'll take up the rest of our time. It says that on December 31st, 2019, we've got notes payable. That's like accounts payable, but the difference is notes payable tend to have interest that we owe. It's kind of like a debt. It's like a mortgage. They call it a note. And in this case, it says that Northwood Manufacturing Company had a balance of $16,000. This represented a 3-month, 7.5% note issued on November 1st. Okay. So what we have to follow is the principles of interest. And some of you may know some of this, but if not, don't worry about it. what's called PRT, principal times rate times time. The principal is the amount of the loan. So in this case, that would be $16,000. The interest rate is 7.5%. And so I always write this in decimal format because when you type it into your calculator, you have to do it like this. But what I tend to do is in all accounting books, they always give you interest in an annual rate. So this 7.5% is actually 7.5% for the whole year. What we want to do is we want to convert that to a monthly interest rate. So what I always do is I just divide that by 12. So at this part of the problem, you take 0.075 divide by 12. That would give you a monthly interest rate. And now I want to figure out what's my time period for the interest that I would owe on this. And this problem, everything ends on December 31st. So it's November 1st through December 31st. And of course, that's going to be 2 months. So in other words, the assumption here is you haven't paid interest yet. And there's all sorts of different financial instruments, but in all the problems that you work, you will assume that you don't pay interest until the end of the loan. So having said that, you take the 16,000, multiply by once you convert that interest rate to a monthly interest rate, just divide by 12, and then multiply in this case by 2 months. What that's going to give you, I think it's right at $200. That's essentially going to be our interest expense. Of course, interest is the cost of borrowing money. So once you do that calculation, the next thing you might want to say is, okay, well, how do I record it? So let me go back. This is, again, you guys have all these answers, so let me just enlarge this. Again, this is all in Blackboard. Just take a look at this first entry here. Of course, you see where it says, let me get my arrow. Here's your interest expense debit. And notice they're crediting an account called interest payable. And then notice there's your 200 debit and then 200 credit. So you're going to be responsible for doing this how to get the $200 and then also recording the debit and the credit, the debit of interest expense and credit of interest payable. Okay, that's essentially called an accrual. That's one of the new types of adjustments you're going to be doing in this chapter. Is called an accrued expense. What it basically means is that we owe the money, we've incurred it, but we haven't paid it yet. But we still have a time period that we have to make sure that we're recorded. Okay. So if I go back to this now, this is again back to your book. So again, this is letter A. You'll get a lot of problems with it. Anytime you see notes payable, they will always give you an interest rate, a balance, which is essentially, they call it the principal of the loan, and then the time period. This is a 3-month loan, and of course, when the loan began. Because what I would tend to do in class, if we had our actual class meeting, what I would do is I would show you, well, what generated this loan? Well, you would have debited cash, 16,000, and you would have credited notes payable for 16,000, and that's what would have happened on November 1st. Okay, so we borrowed the money, they gave us the money. So essentially what happens then is that December 31st, which is 2 months later, we have to figure out, again, how much interest do we owe right now? We haven't paid it yet. And that comes the calculation that I just showed you, which is that PRT calculation. That's going to be your adjusting entry. But this part, I'm just showing you this where you debit cash and credit notes payable. That's what would have generated this adjusting entry to begin with, is that we borrowed money and that we owe interest. So the interest expense is what we want to offset revenue. So that's why we have to do that adjusting entry. And so you'll see a few of these throughout the book. This is 12.4. Go back to the mouse. I think they do. There's 12.6. You'll see another note payable problem. 12.7. Let me clear these. You'll see notes receivable. I want to make a note today. We'll do more of these on Thursday. I'm sorry, on Wednesday and next week as well. Whether you see notes payable or notes receivable, there's a notes receivable. You still do the same. The way you do the calculation is exactly the same. It's no different. It's still going to be PRT. It's going to be interest revenue and not interest expense. Again, I'm not going to do that today, but I just want to make sure that after you finish this chapter that you're very, very familiar with this concept of how to calculate interest, because it's very relevant with adjusting entries as well. Okay. that make sense? Anybody have any questions on that? So I'm at 10:39 right now. I'm kind of nervous that this thing may just cut us off here because they did say it's a 40-minute limit. I'll keep going for another 10 minutes if it lets me. I took a training on this, and they told me that they were actually waiving all the 40-minute limits, and I think they said it was going to be unlimited. But just because they said that doesn't mean that it's going to actually happen. So we'll see. But so again, this is at the end of the chapter. So I just showed you this notes payable. And again, this is exercise, what, 12.4. And I just showed you 12.A and how to do that interest. The rest of these, where you've got B, C, and D. So this one, that's what they call an accrued expense. All right. We get to letter B, guys. This one that's your prepaid. And we did that in chapter 5. And in fact, B, C, and D are all prepaids. Okay, so those should be review for you. So you've got a supplies adjustment on part B. You've got on part C, it looks like that's going to be an insurance adjustment. And then part D is going to be your prepaid advertising. Again, more review. This stuff you just would have been, this is exactly what you would have just been tested on just last week as well. Okay. So the nice thing about this chapter is the concept is not new. Adjusting entries you've done already. It's just that we're going to be doing some new types. I've already shown you, go back, I showed you earlier. This first one right here, this is 12.3. This is part A. That was a new one. That's your bad debts, your uncollectible accounts expense. That's a new one. And then I just showed you interest. That's another new one. That's going to be another accrued type of an expense. Okay. So that's my goal for chapter 12 is not only is to review the adjusting entries, but also to highlight and show you how you do some of these new types of adjustments, whether it's interest accruals or payroll accruals or bad debts expense accruals. I'm also going to show you this one where you have an unearned revenue where it's actually a liability, but it actually is going to be another type of an adjustment because of time periods. Okay. And so having said that, let me just manage this for a second. It looks like I got, how many people? I got 7 people in here. That's good. Does anybody have any questions on anything that I just showed you? I think I have I'm going to try to make sure I have everybody's mute. What happens is I can control the mute where if you're muted, nobody can hear you, but everybody I think has the open mute on. You should be able to, I should be able to hear you if you talk, if you have any questions.
Nothing yet.
You guys, don't worry about this. I mean, we're doing 2 weeks on this chapter, so I don't want you to panic thinking you got to know it all right now.
Will we have another Zoom meeting? Because I kind of like doing this every once in a while.
I'm gonna, guys, yeah, I'm gonna do this until we're done. Every week, Monday, Wednesday. The way this will work is all you got to do is log in. I'll have the meeting ready. We're doing it Monday, Wednesday until the end of the semester. I apologize for not getting this up sooner, but I was getting some training done on it and had some other issues. And, you know, quite honestly, this COVID thing, I think kind of caught everybody off guard in terms of what to actually do. So I spent a lot of time trying to get all of your video files in Blackboard have all been converted over to MP4s. That took me a while because my home computer is a little bit slower than my work computer, but it took me several hours, but I got everything converted to MP4 so that when you go to Blackboard and click on like the learning modules for chapter 12, everything on there is MP4 format. It should be much easier for you to view those videos at home or anywhere you're at. I think you can view them on any computer. But yeah, I'm going to meet Monday, Wednesdays at 10 a.m. with whoever wants to log in. It's optional, but I'd be glad to see anybody come in. And, you know, as you're working through stuff, if you get stuck on stuff for the rest of the semester, just email me. And I believe I can even set up, I haven't done this part yet because I'm still new to this Zoom as well. I'm learning, but I believe I can actually even set up like an individual office hour meeting with one-on-one, where I could do the same thing just with individual with each of you, and then you could just ask me specific questions if you're struggling on anything. And so if that, if that's something that's might be of interest, just let me know, and I can get that set up as well. And that could be a situation where we could just arrange it. It doesn't have to be on Monday or Wednesday. It just could be like an office hour time if you wanted to log in for half an hour on a Tuesday or whenever. Just let me know. We can try to work something out there as well. I'll try to help you out. But yeah, I'm doing this every Monday, Wednesday at 10. And what I'll do is today I wanted to first show you the project, but I also wanted to show you a couple of things going on with Chapter 12 and what you got to be doing, to give me some illustrations. And then, once we've done that, I'm going to do this week and then next week, just basically I'm going to show you, I'm going to demonstrate on here how to work these. When you go to Blackboard in Chapter 12, you'll see that I have a couple handout illustrations for you. I'm going to work those live for you as well, but you also have the video, so you can play them even before I work them. And I'm going to work them out again for you just to kind of give you some more reinforcement, if that helps. All right. Because remember, the way I had to redo the schedule, I think your last exam is only over chapters 12 and 13. Okay. And again, there's more information coming. I don't want to just throw everything at you today, but I'm actually going to also give everybody a chance to do another test, an optional fourth exam. And then that'll be in Connect. And what I'll do with that is, if you take it, I'll drop your lowest exam. So if you had a bad first exam or a bad second exam or something happens, I'm going to give everybody an opportunity to do an extra test in Connect, and then I'll just drop your lowest exam and count your best 3 exams. And that'll be an amendment to the original syllabus. I think the original syllabus, I said there's only 3 tests. So I'm going to set that. I haven't done it yet, but I'm going to set that up in case anybody had an issue with exam 2. And even going back to exam 1, even if you had a low score, you'll essentially have a chance to make that up as well. I don't know if that helps anybody out, but I'll do that. You've got the project. And of course, I'll meet weekly at 10 a.m., the same format. Hopefully on Wednesday, I'll have my, I had a little issues here getting some stuff shared with you when I share my screen, but hopefully that'll go a little bit smoother with me on Wednesday. The more I do this, of course, it's learning curve for everybody. Right now, it looks like we got 6 people in here, and I think when I checked everybody who had logged into Connect, I think we have about 10 people in the class that's actually still doing stuff. So just to kind of give you perspective of how this whole weird stuff going on now with this COVID thing, it's affected a lot of people. So all right, so does anybody have any questions?
I think I'd like to maybe do a review session for some concepts that were covered in some other chapters that I don't have a handle on.
Okay, is that Everett?
Yeah. Mm-hmm.
Everett, can you send me an email of what chapter or what specific stuff? If you do that, I can do that on a Wednesday as well with you guys, if that helps.
Yeah, because we haven't seen each other for a while, and so there might be some things that are escaping me. Sure.
Okay.
Great.
Can you let me know what exactly you would like, and I'd be willing to do that. Just let me know specifically what you'd like me to reinforce. It won't take me long. I can just pick a problem and then just kind of illustrate it on here for you if that helps everybody. Just let me know whatever you want. Just think about before Wednesday. If you can, shoot me an email. Okay. And put it on my email, and I'll make a note of it, and I'll make sure I do that first thing on Wednesday. Does that sound good?
Yeah, thank you.
Okay, so guys, we're right about 10:48. I had this thing set to record, so what I'm going to try to do after this meeting is I'm going to try to share this recording. In other words, I've recorded what I just did with you guys today. I'm going to try to share this either in Blackboard, where you can go back and play it again if that helps. But we'll see. And then, of course, maybe on Wednesday, you guys can give me some feedback to see if what worked for you, what didn't work, or what else you'd like me to try to do. I know we only get about 50 minutes. It looks like the Zoom did cancel that 40-minute time limit because we were all able to go past that 40 minutes, which is pretty cool because this is essentially a free service. It's pretty neat. But again, it's my first time doing this, so I'm hoping that the more we do this, you know, the learning curve, any sort of kinks, I'll get those worked out and it'll hopefully run a little bit more smoother on a Wednesday. But I'm glad everybody's able to make it, that can make it. Again, let me know. Can you guys still see me, by the way?
Yes.
Yeah.
Okay. I think I got my video. I was doing a Skype meeting a couple weeks ago and I could not get my video to work on my computer, but it seems like every time I got it on this Zoom, it seems like it works pretty well. So, all righty, guys. So we're right about 50 minutes. I'm not going to keep you more than what we would normally keep during the class time, but again, start to get into the project, go back, and if there's anything from chapters 5 or 6 with adjusting entries or closing entries, anything is relevant, because it not only would help you with your project, but it's also relevant just for learning. Because we didn't get to spend class time doing closing entries, which is chapter 6. If that's something that you might want to go back and need some help with, I can go back and do a problem with you on closing entries, because you have to do that in your project as well. Okay? That sound good?
Right.
Yeah.
Thank you.
All right, guys, so it's 50 minutes. I'm gonna go ahead and get out of this so that you get back. I know you guys probably have stuff to do. So again, if you're interested, I'm gonna do this again on a Wednesday at 10. And again, I'll probably try to log in a little bit earlier next time. If you're in, you know, just let me know if there's, you know, specific stuff you wanna go back and review, and I'll be glad to do it. Okay, guys?
Okay.
All right. All right, it's nice to see you. All right, see you guys later.
See ya.